Welcome to the Deep Dive. We're here to sift through mountains of information and pull out the insights you actually need to be, well, properly informed. Today, we're diving into the really complex world of stock analysis, and we're focusing on a company that's always in the news, constantly making waves, and maybe at a real turning point, Tesla. Ticker symbol TSLA. We've got quite the stack of sources in front of us, detailed stock reports, transcripts from their latest earnings call, news updates, analyst opinions from all sides of the spectrum. Our mission today, cut through that noise, pinpoint what really matters, give you a clear, concise picture of where Tesla stands right now, especially after these latest earnings, and what the future might actually hold for them. Think of it as your guide to understanding one of the most talked about companies out there.
It really is a fascinating case study. What we'll try to do is help you connect the dots, between the immediate financial picture, what's happening right now, and this incredibly ambitious long-term vision they keep talking about. We want to provide the context so you understand not just what happened, but why it matters for a company like Tesla, and maybe more importantly, what questions you should be asking yourself as you try to understand this very dynamic, often controversial company. The key thing here, I think, is that Tesla isn't just judged like a normal car company anymore. It's almost become a proxy for how investors feel about, well, future tech, even if that future is years away and frankly full of regulatory unknowns. That dual identity, that's like it's so compelling and, yeah, so divisive.
Okay, let's unpack this then. We probably need to start with the current situation. So looking at the data from July 23rd, Tesla's last close was $305.30. But there was a pretty big one-day drop, right? $27.26, which is what, about 8.2% down. That's quite a hit. What's really behind that recent slump, and how does that price stack up against some key benchmarks?
Yeah, that sharp drop, it happened right after their Q2 2025 earnings came out on the 23rd. Clearly, the market did not like what it heard. And when you look at, say, our source's fair value estimate for Tesla, it's sitting at $259.65. Even their own internal price target in the source is $300.54. So the fact the stock was at $305 before the drop and still isn't massively below that target after the drop, well, it suggests it's still seen as overvalued based on, current fundamentals, traditional metrics anyway. And it's always useful context to look at their 52-week range. It goes from $182 all the way up to almost $489. That huge gap tells you so much about the volatility and the just wildly different expectations baked into the stock.
Right. So a negative reaction to Q2. Can you break down the really critical numbers from that earnings report for us? What were the figures that jumped out and what caused that reaction?
Absolutely. The Q2 performance was, let's just say, notably disappointing on several fronts. Total revenues down 12% compared to last year, landing at $22.5 billion. And if you look just at the car side, automotive revenue, that saw an even bigger hit, down 16% year over year. It wasn't just one thing. It was mainly driven by, one, lower vehicle deliveries, they sold fewer cars, and two, lower average selling prices because, they've had to cut prices to keep demand up. That combination really hurts the top line. And then further down, operating income just plummeted, down 42% year over year to only $0.9 billion. That pushed their operating margin down to just 4.1%. That's a big squeeze on profitability.
Wow. And free cash flow. I know it's a big one for investors. Shows how much actual cash is coming in after all the spending. That got hit hard too, didn't it?
Oh, indeed. Free cash flow was severely impacted, as putting it mildly. It dropped a truly staggering 89% year over year, ended up at just $146 million.
Only $146 million for Tesla.
Exactly. For a company with their scale and ambition, generating that little cash after investments is, it's a major flag. Taken together, these results really highlight a fundamental slowdown in the main car business. It's not just a blip. We're also seeing data showing them losing market share in key places like Europe for the 6th month straight. That points to tougher competition and, wider market issues. Structural headwinds, maybe.
Okay, sounds like a genuinely tough quarter. The numbers are pretty stark. How did management, particularly Elon Musk, talk about this? Did they try and spin it positively? Or were they actually quite upfront about the challenges?
They were pretty candid, actually, which is interesting given Tesla's usual optimism. Musk himself said the company faces and I'm quoting here, weird transition period.
Oh, weird transition period. Okay.
Yeah, and he said he anticipates a few rough quarters ahead, maybe even stretching through Q1 or Q2 of next year.
So quite cautious guidance then.
Very cautious. And it seems to stem from a few things. They mention the sudden repeal of that $7,500 IRA EV tax credit in the U.S. That really hit demand and supply planning. Plus, they got less money from regulatory credits because emission standards are changing. That used to be a nice little earner for them. And on top of that, tariffs apparently added about $300 million in cost just in Q2, with more impact expected. So, yeah, kind of a perfect storm hitting them.
Okay, so despite all these immediate problems, these headwinds, and this sobering outlook for the next few quarters, the sources we looked at make it really clear. Tesla is aggressively shifting its story and its spending towards something much bigger. We're talking AI, robotics, autonomy. This feels less like a small adjustment and more like a fundamental pivot. Can you unpack that future vision for us? What's the real scope here?
Right. This is really where Tesla sees its future advantage. It's competitive moat.
Yeah.
They explicitly point to their real-world AI and their autonomous driving tech, FSD, as the core strength. And the vision is huge. It includes launching the Robotaxi service in Austin with paying customers, crucially, and no driver behind the wheel. And they have these, frankly, very aggressive plans to expand that across the U.S., though, of course, that depends heavily on getting regulatory approvals, which is a massive hurdle. But their stated goal: address roughly half the U.S. population with autonomous ride-hailing by the end of this year. It's incredibly ambitious.
And it goes beyond just cars now, doesn't it?
Mm.
This is venturing into areas that sound almost like science fiction.
Exactly. The ambition is much broader. They're pouring significant investment into the Optimus humanoid robot. They expect version 3 prototypes by the end of this year and scale production next year.
A humanoid robot for
Oh.
what exactly? Factories, homes.
Potentially everything, eventually. That's the vision, general purpose. Plus, huge steps in their own AI chip development. You've got Dojo, their supercomputer. Dojo 2 is expected at scale next year. They claim it'll have the power of like 100,000 NVIDIA H100s, which, I mean, those are the absolute top-tier AI chips right now. So that's a massive claim about their computing power. And then there's an even newer chip, AI5, supposedly coming end of next year. Tesla sees these technologies as utterly transformative, disrupting multiple industries, making them potentially the world's most valuable company. It requires you to think very differently about valuation.
Wow. Okay. That is a monumental bet on the future, especially given the current struggles in the car business. What kind of money are we talking about to fund this? Is this just pocket change, or is it a level of spending that could really strain them in the near term?
Oh, it's absolutely significant capital. Their capital expenditure, CapEx, is forecast to be over $9 billion just for this year.
$9 billion.
$9 billion. And that money is going into all these future things: the Cybercab platform, the semi-truck production, expanding their AI infrastructure. It also includes building their first factory for LFP battery cells. Those are cheaper, more stable batteries, key for energy storage, and planning a third huge mega factory just for energy storage batteries in 2026. So, yeah, that level of spending obviously puts even more pressure on profits and free cash flow right now. It's basically asking investors to forget today's numbers and believe in a very expensive, very speculative future.
Okay, so this is the core tension, isn't it?
Yeah.
You've got the current business struggling, management warning of rough quarters, versus this incredibly ambitious, almost sci-fi vision for AI and robotics. Our source rates Tesla's economic moat as narrow. What exactly does that mean in this context, and how do the analysts, the bulls and the bears, see this whole situation? How does this tension play out in their valuations?
That's exactly the debate. The narrow moat rating basically means that while the long-term AI autonomy vision is compelling and could lead to a wide moat eventually, it's highly speculative right now. Think of a moat protecting profits. A narrow one means the current business isn't that well protected from competitors, the money from AI and robotics. The source says it's years away. And getting these things commercialized faces huge regulatory hurdles, especially overseas in Europe and China. Plus, as we said, the core car business is facing intense competition and price pressure right now. So the current castle walls aren't very strong.
So the bear argument, the negative view, is essentially that the current business, the foundation, isn't strong enough to support this huge future vision they're building. Is that the main concern?
Precisely. The bears are pointing to several red flags. One, the slowing car business. That's fundamental. Two, the massive execution risk and regulatory risk for things like Robotaxi and Optimus. These are huge if.
Right, not guaranteed successes at all.
Not at all. Three, the current stock price. They argue it already includes a massive premium for a future that's still hypothetical. You're paying too much now for maybe someday profits. They also stress the intense competition, especially from China, and as we just discussed, the huge capex drain on current finances. For bears, things get worse if car margins keep falling, or if there are big delays or setbacks in that AI and robotics timeline.
Okay, that makes sense. So what's the counter-argument? What's a bull case?
No.
Why are some analysts still so incredibly optimistic, even with these rough quarters in the spending? What's their story?
The bull case paints a completely different picture. They focus on Tesla's leadership in real-world AI and autonomy. They see Tesla not just as a car company, but as this transformative AI and robotics powerhouse.
So way beyond cars.
Way beyond. They highlight Optimus and Cybercab not just as products, but as platforms for future growth. They point to Tesla's vertical integration, making their own chips, their own software like Dojo as a massive competitive edge. And they see the existing infrastructure, the superchargers, the gigafactories, as assets not just for cars, but for the rapidly growing energy storage business, too. That could completely redefine Tesla's market. For bulls, the proof points would be things like getting widespread regulatory approval for Robotaxi, showing real quantifiable progress with Optimus, and actually deploying Dojo 2 and AI 5 at scale. Those would be huge validation signals.
Interesting. And what about insider activity? The executives, the board members, what are they doing with their own stock? Does that give us any clues? Are they buying into the bull case or cashing out?
It's a really interesting data point here, actually. The stats for 2025 show a pretty clear trend. Way more selling than buying by insiders. In Q2, for instance, the buy-sell ratio was just 0.15. That means insiders sold significantly more shares than they bought.
That doesn't sound overwhelmingly confident in the near term.
Well, typically that kind of ratio suggests insiders might be locking in some gains or maybe reducing their exposure, perhaps anticipating some of these rough quarters. But it contrasts quite sharply with Elon Musk himself saying he has major concern over his own 13% stake, feeling it might not be enough control to steer the company, especially with this huge AI pivot.
So he wants more control while others are selling?
It's
complex.
It adds another layer, doesn't it? And we've also seen several investor alert notices from a law firm recently. These indicate potential legal claims from investors, possibly related to recent performance or disclosures. Now, these alerts don't automatically mean wrongdoing, but they definitely signal increased investor unhappiness and legal scrutiny around how things have been going lately.
Okay, so wrapping all this up, the immediate financial pain, the massive long-term bets, these clashing analyst views, the insider signals, what does this all mean for you, our listener, trying to make sense of this? Especially when you see the average analyst price target at nearly $390, but individual targets swing wildly from like $137 all the way up to $500. That spread is huge.
Yeah, that massive range really just reflects how divided everyone is on Tesla. It highlights the core challenge of valuing this company right now. On one side, you've got the stock trading above what many consider fair value, even after the drop, and management openly warning about rough quarters. That clearly suggests a big premium is already baked in for a future that's still, years away from contributing meaningfully to the bottom line. Investors are paying now for future dreams. But on the other side, you look at the long-term forecasts from analysts. Yes, they show a dip in revenue and earnings for 2025, maybe 2026, matching the guidance, but then they project really strong growth right out to 2029. That implies many analysts are actually betting on the eventual success of the AI and robotics stuff. They see it eventually paying off big time. So it really forces an important question on you, the learner. When you look at Tesla today, are you investing in a car company that's just hitting some temporary bumps? Or are you investing in a highly speculative AI and robotics venture whose main business, the car part, is actually facing some pretty serious challenges right now? For anyone evaluating a company like this, it's not just about the financials anymore. It's about judging the quality of that long-term vision, understanding the tech hurdles, assessing management's track record on these kinds of huge bets. Are the short-term struggles worth it for the potential long-term reward? And what specific milestones should you watch for to see if that bold future is actually materializing? Because right now, the financial struggles and the main revenue stream, plus the huge spending needed for the speculative future stuff, they definitely underscore that Tesla's current competitive advantages aren't strong enough yet to consistently deliver outsized profits in today's market. It's a company asking for a very, very long-term perspective.
What an incredible deep dive. It really feels like Tesla is at a crossroads, doesn't it? A true transition period, trying to balance the tough realities of the car business today with this, almost science fiction vision for an AI and robotics future. The numbers are telling one story about the present challenges, slowdowns, But the leadership's narrative paints this entirely different picture about immense long-term potential. It's a fascinating conflict playing out right now.
Exactly. And what's really striking is how much critical thinking this demands from anyone watching. You've got the company itself admitting to rough quarters and financial strain, yet at the same time, they're pouring billions into a future that's years away from generating real returns. It really forces you to think hard about how you personally weigh current performance against potential future breakthroughs, especially when those breakthroughs face big execution risks and regulatory roadblocks. It's a fundamental test of how you value potential versus proven profit.
So as you reflect on this, what stands out to you about Tesla's shift from just an EV maker to this potential AI giant? And how do you personally weigh these present challenges against such a, frankly, audacious future vision? We really hope this deep dive has given you a clearer picture, maybe some valuable context to think about as you navigate all the noise surrounding Tesla and the wider market. And hey, if you found this valuable, please do hit that subscribe button. And maybe ring the bell icon too. That way you get notified when we drop our next deep dive. Your support genuinely helps us keep producing these in-depth analyses. Thanks, Binabut, for joining us today.